and welcome to the Core Reports Weekend Edition. We're going to be talking about both direct and indirect taxes today, and more importantly, the expectations from the Union Budget 2024, slated for the 23rd of June. That's in the coming week. So let me start off with our two guests, Anita Rastogi of Pricewaterhouse and Samir Kanabar of Ernst & Young. So Anita, let me begin with you. I think let's first look at the overall landscape of indirect taxes in India. So my first question to you really is to lay out what this landscape looks like in terms of goods and services tax. How complex or simple is it compared to where it was before this regime of taxes? And where are we today? And then we will come to what the budget could do or cannot do.
Sure. Thank you so much. Goods and services tax, when it was introduced in 2017, it was a brilliant envisaged law which had to come in and replace the legacy indirect taxes law where we had multiple taxes, which meant that if there was a service, there was a service tax. If it was a sale of goods, we had the value added tax, so on and so forth. And there were many, many taxes which were there. We also had an issue of tax on tax because of the different tax regimes which we had. And it was observed that GST, which is a goods and services tax, which means one tax both on goods and services, will now apply across India. So, one nation, one tax was the dream. Um, I would say that the wish list was very good, but I don't think that the implementation happened so well in the initial years because the way the law was drafted and the way it was so complex, difficult for even the administration to administer it along with the assessees to understand it. But I must give kudos to the government that multiple plethora of clarifications and notifications were issued immediately also the moment they realized that these are the loopholes, because you see it was a first time for everybody, whether it was for the government or it was for the taxpayers or it was for the consultants. So all of that happened, and we also were so pragmatic to say that, well, we want to make everything digital. So the all the returns were filed online, and there was of course a lot of teething problems at that point of time as well. And I remember one of the very senior officers said to me that the portal issues which was faced in the initial times was like we were building a ship, and before the ship was fully built in we were asked to sail, and hence we were trying to solve things, right? Having said that, now so many years have passed by. I think people have understood what GST law is all about, but still, is it a simple tax law? Today, I will say no, it is still not a simple tax law. I'll say it's more of a fractured law because wherever there were problems and loopholes, government came in, they issued notifications, and they kind of clarified things. But yes, much better than where we started. Independent of that, because of the interpretation issue, there have been just too many notices, too much litigation happening across India. And the Director General of Investigation Wing has also been quite proactive in doing investigations across the sectors, with huge amount of demands being raised on the corporates. And hence the load has gone to the High Court, because till today we still do not have the tribunal for GST, and hence the high courts are being burdened by multiple writs with regard to the investigations which have happened. So today we are not in a great situation, I think, but I do believe that the government is working towards it. There are measures which they are taking, especially the GST Council meetings which happen. They try to bring in the concept of ease of doing businesses, issue more clarifications, and also try to help the DGGI that you can't just issue notices and demands. In fact, there is this proposal which we understand, which will soon get notified, that you have to take an approval from the policy making wing of the government of GST before you issue demands on some interpretation issues. So I think we are moving towards a better regime. We are taking baby steps, but miles to go before we sleep, I think.
Okay, so two questions very quickly, and before I come to Samir. So one is, you talked about the fractured nature of the law and the fact that there are too many notices. So can you give me an instance of what or where most of these notices lie, or what kind of notices would, let's say, constitute most of those which are being sent?
So I think the most latest and what people must be reading also is on regarding online gaming. That sector has really been targeted, I would say, because it was felt that the valuation on which the tax was paid was absolutely wrong as per the department and as per the investigating agencies. So that is one, and where almost everybody has gone to the, and in fact today the matter is in Supreme Court, and Supreme Court is just waiting. I think the next hearing is going to happen on 31st of July. The other is on lot of classification issues. Now, GST has got different rates. The moment you have multiple rates, people will try to interpret as to in which rate bracket my product or services fall. And because of that, you have classification disputes going around, whether whether honey, this is a pure honey, or it could be a car, it could be a vehicle, it could be things like papad, those type of things also have actually seen litigations, right? I mean, whether it's a roti or a paratha types of things. So I think because we have multiple rates, that is why department thinks it differently. Assessee might interpret differently, and that's why there's a lot of litigation on that as well. Other than that, of course, there are a lot of reconciliation issues. And now there's a concept of input tax credit under the GST, which essentially means that if I, as a service provider, is procuring some goods or services and I pay tax on my procurements, I'm eligible to set off that tax with my output tax. Now, there is a mechanism where I can set it off. There is a portal which actually allows me to do an entire reconciliation, but it is not so seamless as it was initially envisaged. So a lot of litigation on input tax credit as well. So classification, input tax credit, interpretations. One of them is online gaming, and almost many sectors as well.
Okay. Samir, so let me start off with you. So, when it comes to tax, the expectations are quite simple. And the biggest expectation, obviously, will be that tax rates will go down, whether it's for capital gains or personal income tax or corporate tax. Of course, my understanding, like many others, is that none of that will happen, and we'll see either nothing happen or even the prospect of something increasing, which of course people will not be happy with. So, how are you seeing, in a broad sense, where we stand before we get into the nitty-gritties?
So, and at least I would sort of humble with Anita to say that yes, GST is in a arena where there is no certainty and people are in courts and everything is going crazy. But tax is an established system, so it's there since maybe 1922. That was the original act, and then we have 1961, and the law has evolved. But more importantly, the income tax has become an international or a global subject matter, and it is not confined to every country. For example, now we have sort of an understanding or a global understanding of almost 140 plus countries to say that every country will levy minimum 15% tax. Whether 15% is right or wrong is a separate debate, but at least there is a consensus and there is a dotted line which at least everybody has signed to say that yes, we should accept this 15%.
Right. And
And in
Samir,
light
I'll come
of
to that.
this,
I'll come to the profit shifting and second pillar a little later. But could you talk about more the sort of classic tax, corporate tax, and personal tax first?
yeah. So in and then again, I was just trying to lay the background, but yes, to come to corporate tax, what is important is that we have reduced our peak level of taxes almost from 35% to 25 for corporates, right? So today the peak rate for corporate is 25, unless you are claiming any tax holidays or you're claiming any benefits, then your tax rate could be still as high as 35%, but that may not be applicable because you are claiming tax holiday or tax exemptions. But otherwise, your peak rate is 25. And of course, if you were in a manufacturing sector and you had set up your manufacturing unit before 2023, then you had a special tax regime of 17% effective tax rate. So 15 plus percent surcharge, whatever. So that adds up to 17. So it cannot be lower than this from a corporate perspective. From a personal tax, I think earlier the discussion was that whether the base is wide enough, whether everybody is in the tax net. But if you look at our period of time, or at least in last 4 odd years, we have moved from 2 crore taxpayers to almost 6.5 crore taxpayers, which is a huge base, and it's a multiplier, right? And all the efforts that government has been taking is a automation, bringing in a lot of technology. Government is far ahead of anybody at least in the country, in terms of technology, in terms of tax. There will be hiccups, there will be challenges. I'm not saying no to it, but yes, All this has ensured, and of course, GST has ensured that many people come within the fold of tax. And of course, linkage of Aadhaar and PAN is one more contributor to bring a lot of people. And we know that 97% of the people have Aadhaar today. And if PAN is linked, you can imagine. So we are not debating or discussing now, or there is hardly any discussion that whether everybody is paying taxes or not, right? So the discussion now is that yes, if we have such a wider base, can there be a better tax regime? So if you look at a high tax regime, it is as high as 42% for the super rich or the people who are super wealthy, right? So it goes right up to that level, right? So are we taxing richer at higher rate? We are, right? Are we giving exemptions to people below 5 lakhs? Yes, we are, right? So, in terms of statistics, also, and of course, if you look at again, the government has put up these numbers, it is there on the website that few years back, the people below 5 lakh who were filing returns were almost 50%. Now, that has come down to 33%. So, people who are reporting income below 5 lakhs has reduced from 50 to 33%, right? So now the discussions is that can we sort of revisit the slab rates? Can we revisit what incentives we are giving to on personal tax? Do we need to do away with the two regimes that we have, which makes things so difficult? And can we live with one single regime? And I think we are converging and consolidating to a new single regime. We are phasing out, and I'm sure maybe if not this year, next year, we would eventually phase out to one single regime and make things so simpler and straightforward for everybody.
Right. Okay. Several questions, but let me start with one, Samir. So, why is personal tax collections, or why are personal tax collections running ahead of corporate tax collections? Is that normal? Has it happened before?
No, and again, it's a surprise. And then as I've answered the question to say that because the tax base has increased, right? It is a multiple fold, right? And that is going to sort of only contribute more taxes, right? And again, as I said, more people are beyond 5 lakh, right? So we know that 5 lakh is the hurdle rate below which you don't pay tax, and then of course even above 5 lakhs up to 7 odd lakhs, people still don't pay tax. There are still a lot of exemptions available, but the people have also moved into higher bracket, and that is giving result to higher tax collection. And of course, the as I said again, technology has improved, collection efforts have improved, and compliance. So new generation is sort of willing to pay the tax and sort of have a better life
Right.
and not take any headache. So all of that is contributed.
And this is this normal in other countries as well, where personal tax collections are higher than corporate tax collections?
Again, if I look at different countries will have different answers. So if you look at US, again, where tax rates are quite high, both for individuals, but lower tax rates for corporates. There again, we see that a lot of companies are paying higher taxes because they are making a lot of profits, and there are not many incentives available as of now. But the collection of personal tax again is kind of 50-50 in that sense between corporates and personal.
Right.
Some other European countries will have different answers.
Right, and the reason I'm asking this, and I'll come back to this in a moment, Samir, is because that also in a way decides policy. I mean, or decides the framing of policy or approach towards tax collection. And I'll come back to that. Anita, the indirect taxes today. Now, I'd like you to give me the number. What is the percentage or proportion of total taxes collected in India at this point?
Sorry, I don't have the right number in front
Yeah,
of
yeah.
me, but I do
Actually, no one has
understand
it, which
about
is why I'm asking.
so that was a smart move. so so I do believe indirect tax is a good proportion about the tax collected, overall perspective. That is one. Now, what is the quantum? I don't know the answer because there is no data point from that perspective which is available. States have their different collection points. Center has different. Then we have IGST. So I don't know the answer
Sure,
today.
sure. Anyway, but the question that I'm leading to is really this. I mean, given that indirect taxes are likely to be a larger component of overall tax collections, where are we headed in terms, or where could we be headed in terms of, let's say, ensuring that either that balance is equalized, let's say direct tax collections equal indirect tax, or let's say as the case is in many developed countries, direct tax collections are bigger or higher than indirect tax collections.
See, I can just respond to you on indirect taxes as to what I consider it and how they are going to move. I do believe that indirect tax collections will increase, and the reason is very, very simple. The reason is that, when we are talking about Indian economy, we are talking about people's standard of living going up, their consumption increases. So the domestic consumption of goods and services increases, and each and everything today is actually taxable under GST, other than few items, right? That is one. And the second is that, anyways, manufacturing in India is a focus area for the government. So if we do more manufacturing, right, and we are able to export goods and services apart from the service sector, also the goods as well, then we are going to have much more, taxes which will be collected. So from that perspective, I do believe that there's the taxes will only increase, the tax collection will only increase, because the way the economy is going to grow, it's directly linked with that.
Right. So let me ask you a slightly subjective question here. In terms of, let's say, an equilibrium of, and this applies, I guess, to direct taxes as well, and Samir spoke about widening the tax base. In terms of the addressable market of taxpayers, and I'm talking about indirect tax, would you think we've reached an equilibrium in terms of targeting, touching, connecting everyone who should be connected in this
No.
economy?
No, no, not at all. There are still a lot of pockets which are untouched, and I'm not talking about the exempt sector, because those sectors will always be exempt, whether it is the farmer, I mean the healthcare sector or the education sector, till the time we become so developed that nobody will question that, even if you're going to a school, you should pay taxes. So. But having said that, there are still pockets of people, and there are still sectors where we see that people are not really 100% compliant. Now, that is because of the typical nature of the way things are happening, right? Also, I don't think that there is a zero parallel economy today. It does exist, right? We can't be ignorant about that, and hence I do believe that there's still a lot of scope for increase of the tax base under indirect taxes.
Okay. Now, if you were to look at, let's say, the framing of tax policy, and now we'll come to the union budget next week, what should be the determining thinking before we come to the exact or the specific points when it comes to this time and this policy, this budget?
So I think we have to understand the fundamental principles of taxation, and I have read it in many, many, theses as well. Lower the tax rate, more the compliance and more the collection. It is a very simple concept, and it because if the rates are low, people don't mind paying the tax, right? But if the rates are higher, then there's always chances of more of revenue leakage to happen. Hence, my suggestion here would be that let's have a rate rationalization. Don't have very high rates. One. Second point is that manufacturing in India has to be incentivized. So, from a customs duty standpoint, it is important that the government should do a reduction of the customs duties on the raw material which is imported in India for doing the manufacturing activity. I think that is the next thing which they should be doing. Now, you might ask me that does the government have that kind of wherewithal to actually bear with that kind of a brunt from the customs duty less being collected from the importers? So my answer would be simple, that it is a chain reaction, right? The raw material will be imported at a lesser customs duty, but then once you're going to manufacture, right, and then you're going to sell, you'll have a higher GST collections. So I don't think that government is not in a good position to do that today. They can do that today very much to augment the economy per se today in India.
Got it. So, what would be a good example, Anita, of this, of a, let's say, product where the input cost or the input material, I don't know, maybe it could be petrochemicals or steel, where the input material is, if you reduce the customs duties, we could see potentially or even theoretically a jump in, let's say, goods and service tax collections?
So this is a generic statement
Yeah.
which I have made, because every sector plays very differently, and there's also a concept of inverted duty structure under indirect tax regime, where the procurement rate is much higher as compared to the output rate. So that needs to be normalized also, right? And I think sector-wise, the government has to pinpoint which are the products which are largely not available in India, but we necessarily need to import them. There, I think the rate reduction should be the priority.
Got it. Okay. So, and I'm going to come back to you for more specific, let's say, asks or recommendations from the budget. Samir, again, what would you say should be first the policy or the thinking when it comes to taxation and tax approach for this budget? And then how should it be playing out?
Yeah. So I'll put it in different buckets. One is, of course, looking at how you can simplify and make tax easy for people because now we have a lot of people complying. Second is how you are able to resolve the huge bucket of litigations that you have, which is stuck up at different levels, and unnecessarily people are just litigating. And then third is more importantly, the aspects relating to broader policy as to how one should now be forward looking the tax income tax regime. So in terms of simplification, again, two important things. One is, of course, if you look at from personal tax perspective, capital gains is too complex, right? There is 1 year long term, 2 years long term, 3 years long term, different rates, 10%, 20%. Again, for short term capital gain, different rates. It's a jamboree, and this is the right time to sort of address this because a lot of people are complying. Right? So that's from personal tax. From corporate tax perspective, there are two or three major nuances, and of course I'm not saying that there are not major nuances, but two or three very basic ones. If you look at angel tax, right? Now, if you have accredited investors, right, whether they are EIFs, whether they are venture capital funds, they are registered with SEBI, there are listed companies, they are kind of, approved, accredited, established investors. At least those should not be subjected to any angel tax. And again, for your viewers, what is angel tax? Angel tax is that if you pay something for the capital or the shares that you are acquiring as a primary issue, and if you are paying a higher premium, then that higher premium, which is unfair or treated as excessive premium, is being taxed as income. Now, capital can never be income, right? So that's angel tax, right? So that's one. Second, if you look at again buyback tax, and again this it works for both personal and corporate side. What happens is that essentially you are a listed company. Earlier, for listed companies, there was no buyback tax. Then they brought in the buyback tax, right? There is no reason. At least listed companies should be allowed to buy back their capital. There are various reasons why you may want to buy back, and you should be able to sort of allow the investors to pay capital gains tax. You can't ask company to pay tax, right? And then third one is more kind of if you look at restructuring for corporates. Now, you there are certain mergers in a restructuring scenario which are tax neutral, but in those tax neutral, you can offset the losses of the company which is merging. But if it is a service company or if it is a financial service sector company, and if it has losses and if it merges, then it is not allowed to offset. Now, we had set up this law when India was a manufacturing agricultural economy, but now India is a pure more service. Of course, we are aspiring to be more manufacturing. Not that we are not sort of discounting that, but we are more of service sort of country. So we should allow this kind of restructuring as well. So these are some of the nuances which need to be fixed from a corporate tax perspective. And then if you come to the second bucket, which is litigation, now today, if you have a challenge against an order which is being passed, the first level of your litigation is commissioner appeals, right? Now, virtually this commissioner appeal, they had made it faceless, and since then, it is kind of part-time functioning. It's not fully functional, and lot of litigations are stuck there. Last budget, they made an attempt to sort of add additional commissioner who can take up the matters, but that is also taking its own time, and a lot of funds are getting blocked or a lot of taxes are getting blocked either from government or from the taxpayer. Now there has to be some settlement or arbitration kind of mechanism. For example, if you look at US, you look at Europe, they have this kind of measures that you can go, you sort of admit what you have done wrong, you also say that this is not wrong, and finally you settle and you close the matter. You can't fight battle for 10 years, 12 years, 15 years. Right? So that is something
Right.
that needs to be addressed. Right.
Right.
And then of course,
Yeah. Okay.
yeah.
We are sort of running short on time, so I'm going to get two quick things. Anita, I'm just coming back to you in a second for your wish list. But Samir, before we do that, two more quick points. And I interrupted you earlier when you were talking about the second pillar, which is the whole idea of equalizing or creating a more equal environment for companies who are multinationals, more than 650 million pounds, euros, and have to pay a certain tax so that they don't keep moving their jurisdictions around. So, and that is expected in this budget, or what's your sense?
Yes, so India is late. Normally, India is fast, but for this type of legislation, India is one of the late mover. Most countries have sort of not only brought in the law, they have implemented and they are effective. So it is expected, yes, that if India doesn't want to lose out on the taxes, it is time to bring this law. So it is more certain to this law is more certain to come in.
So you mentioned personal tax, and you said that, for example, in capital gains there were multiple levels, for 1 year, for 2 years, different asset classes. What's the ideal
Yeah,
situation there?
so the proposition would be that you standardize the definition of long term and short term across the assets, unless there is really some need to distinguish. But otherwise, standardize that you say 1 year or 2 years, whatever, and then just leave it so that people know it's very clear. Second, the rates that are applicable for long term and short term should also be standardized so that there is again no confusion. If you look at equity fund, you look at debt fund, you look at arbitrage fund, you look at immovable property, again different rates. So please standardize those rates and sort of even for short term capital, rather than having a higher tax rate for listed securities, say you have 15%. So why not have a preferential short-term capital gains rate even for various class of assets? So if this can be simplified, will make things simple and easy for everyone.
Right. Thank you for that, Samir. Anita, your wish list as we conclude.
So essentially, let me focus on customs because customs is one most important area which will come out in the budget. Here also there are two aspects. One is certainty. I think everybody wants certainty in today's world when we're doing business as far as the imports are concerned, and for that there is a concept which the government should definitely use. They're using it for transfer pricing perspective, which is the advanced pricing agreement, wherein actually the assessee can go and discuss it with the tax authorities as to what should be my arm's length if I'm doing a transaction with my parent and an Indian subsidiary. A similar concept should come for customs also. It is very prevalent in Korea, and we can actually just follow that same model, which essentially says that it's an advanced customs valuation agreement, which means when I import goods, most of the time the customs authorities disagree with the value on which I buy from my parent company, because the objective of the customs authorities is that it seems you have undervalued your product and hence paid a lesser customs duty. So it is important that if we have that mechanism wherein in advance itself we go to the authorities and agree on a particular rate which has to be agreed between the parent and the Indian subsidiary, so that for the next 5 years, I don't have to be troubled about it, and I'm certain that this is the valuation which is going to be followed. I think that is something which the government should definitely do because they've done it for the transfer pricing. And we have precedents across the world also to do that. That's one. The second is that, there's another way of getting some certainty, which is the advanced ruling authority, which actually, when I can go to the advanced ruling authority and ask them on a particular transaction, how it has to be taxed, what is the value, what is the additions, deductions, etc., etc. So we have today in India only two benches, which is in Delhi and Mumbai. Definitely with the kind of imports which we do, we should have one bench in south and one bench in east part of India as well. So we need to increase those benches. And the last one is that government today is wanting to reduce litigation, and hence we have seen that a couple of years ago there was an amnesty scheme which was brought in for the legacy law, which is service tax. Now they have announced a minor type of an amnesty scheme under GST also for the first 2-3 years, that they will not be asking for interest and penalty if somebody makes a payment of tax by March of next year. I think that even for customs, there should be an amnesty scheme which should come in, so that all these old litigations which people don't want to run around can be closed faster, and we reduce the burden on both the government and the taxpayer, and move forward and focus only on the business. So this, I think, is the need of the hour.
Right, and I think simplicity is the underlying theme that I've sensed from both of you, and I do hope we get a simpler tax regime in the budget. And apart from, of course, making it more friendly to those taxpayers and hardworking taxpayers, whether they're companies or businesses or individuals. Thank you both for joining me.
Thank you.
Thank you.